Folks, welcome back to the Contrarian Trader. This is Robert Desmond. It is Sunday, January the 31st, 2010. Folks, last week the markets experienced another bloody week, and we have been predicting this for quite some time now. You can go back to our recordings, which I believe we started back in 2007, but really we started week to week back starting in September of 2009. And you can track what we predicted would occur is now occurring. It's all playing out. Were we a bit early? Yeah, we were. But we saw it coming. We had our long positions. We enjoyed this run up here with our long positions. But we started to, as we approach these resistance levels here, we started to close out our long positions. We are now net short the market. We finished last week below the 1100 level, and I have warned my subscribers and those video watchers here that we need to watch out for these support levels, because as they continue to break these support levels, you're going to see selling momentum increase. Now, what did we do last week? Last week, we went short of Apple Computer. Apple Computer, you'll note, they were rolling out the iPad. There was a lot of hype about Apple Computer, their earnings, yada, 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 greatest earnings ever in the corporate history. We love that stuff. That's contrarian indicators. You know there's going to be a sell-off when all that hype is built into the stock. You had Tim Seymour, all the gang on Fast Money saying, Pete Nigerian saying that this is going to 270, 280. They're outbidding each other on how high the stock is going to go. Yeah, eventually, but not now. They could do you the courtesy of saying, not now. Now is not the time to start buying this stock. But they didn't do that. So what we did, what I told my subscribers to do, was let's take advantage of this spike up here last week, up at the 213 level. We went short of Apple Computer at 212.77 because we saw the technicals begin to break down. Money was rotating out of the stock. You're not going to find that on CNBC. You're not going to see that in an S&P report of the stock. And we were right. By the end of the day, we were already up 3 or 4% on the stock. And what we saw is, you'll note here, the previous high was 215.59. Next high was 213.77. That's a lower high. That's a bearish indicator. So we started loading up, getting short at 212.77. Is it too late to get short? You know what? Maybe, maybe not. But the risk to reward, were you a member of the Contrarian Trader, you would have known, here's the best time to get in here. We're putting in a lower high. The risk to reward was on our side because our stop loss was just above the 215.59 level. If we were wrong, the most we were going to lose per share was about $2 per share. If you want to use the same rule here and try to get short at the 190 level, well, then you're going to have to risk $13.71 to see whether or not you were right. That's where your stop loss should be. So, folks, you've got to stop listening to these people on TV. They're cheerleaders for the street. They have their own positions. They'll tell you that they're long these stocks, and then proceed to give you these outrageous target prices because they're in their own little la-la land. That's where they want to see the stock go. And Lord knows they don't want to be on TV saying sell the stock because they'll get crushed. Or at least that's their perception. Take a look at the price and volume action on Apple Computer. Look at this selling volume here. Yes, this is a great stock, but look at this selling volume. It's incredible. This type of volume here is indicative. When you see a price and volume action like this, look at this. This is a doji, very little movement here. And when you see price and volume action on volume like this, with very little price movement, yet the volume is this high, that means that they're rotating out of the stock. They're selling into the buying. These are the amateur money coming in to buy up this stock. They heard the hype, iPad this, greatest earnings ever that. And then what do? They come in, they bid up the stock, only to have the institutions come in, dump it right down on their heads. Now, Here they are. You listen to Guy Adami, or not Guy Adami, Pete Nigerian, back here telling you to buy the stock. Where would you be today? Down at 190. I mean, you need to choose sides. I mean, it's outrageous. Um, the next stock, everybody knows we've been short of this one for quite some time. We were shorting it up through here, and we went short at the very top here. We went, I'm sorry, long of the I believe April 55 puts. We made 56% on those puts within a week or so. We are still short of U.S. Steel. We're enjoying our profits right now. We have huge profits in Apple and in U.S. Steel. The S&P 500 is down for the year. We are up more than 20%. I mean, for $29.95 a month, that's less than the price of Starbucks coffee a day. So I don't know how you're going to get a better deal than that. And plus, you get a 14-day free trial. So please join the Contrarian Trader. Stop listening to these thugs on Wall Street and learn how to short stocks. There's no reason why you need to be net long all the time. You can learn how to short. Okay, please. On Friday, you had the government come out and say that GDP grew at 5.7%, which is a pretty good number. But you need to keep in mind, and Nouriel Roubini came out as well on Friday, said the same thing that I'm about to say. It's all on fiscal stimulus and incentives from the government, cash for clunkers, et cetera, that cause this type of growth. This is not going to repeat itself in the latter part of the year when the stock market, I apologize, when the bond market starts to price in higher yields. My subscribers know this day to day. When I send out my commentaries, I tell them to watch out for specific indicators and join the Contrarian Trader. And I won't share them with you now, but you join the Contrarian Trader and you'll know exactly what indicators we were looking at to tell us to get short of U.S. Steel. You'll know what indicators we're looking for that are telling us this market is going lower. May we have a counter trend rally? Sure, but that's an opportunity for us to add more to our short positions because we are heading lower, folks. I don't know what to say. In the limited time I have on this recording, I don't want to see the small investor get burned. That's why I started the Contrarian Trader. I take thorough enjoyment out of humiliating those on Wall Street and the thugs on the talking heads on CNBC and Fox Business News. You need to listen to an unbiased opinion. I don't hype stocks that I'm already short of or long of. I don't play that game. I take enjoyment, thorough enjoyment out of being correct. And if I'm not correct, taking the stop loss, putting the stop loss out there and getting out of position. Last week, Cantor Fitzgerald came out and upgraded the entire shipping index. Let's take a look at one of those indexes right now, one of these stocks that they upgraded. They upgraded the entire shipping index. And I cited an index that I reference all the time to my subscribers, telling them, don't listen to Cantor Fitzgerald. Do not. These stocks are cheap right now on a dollar basis, not necessarily on a valuation basis. Don't get excited by this. Now look, this is a weekly chart. Cantor Fitzgerald came out last week saying, get long of dry sea shippers and a whole bunch of other shipping indexes, shipping companies. I cited an index that I have been watching as a measure of China. I said, don't listen to Cantor Fitzgerald. They are hyping these stocks to get out of positions. These stocks are going to drop. They are not looking at they're either not looking at the indexes that I'm watching, or they're looking at them saying, you know what? Let's get out of these stocks fast. Let's get an upgrade out there so we can get out of our positions. So, folks, please sign up for our 14-day free trial offer. Watch the indexes that we're watching. We'll tell you what we're watching, and we'll get you out of these positions, or at least counter what these people are telling you to buy. So take advantage of our 14-day free trial offer. Sign up for our channel. And if you have any questions, please email me at robert@thecontrariantrader.com, and I'll talk to you soon. Have a great trading week, folks, and goodbye.